Hello and welcome to M&A Access, the official podcast of the Alliance of M&A Advisors. This is Ekaterina Kozlova, and today we're spotlighting a role that's gaining more influence than ever in private equity, the operating partner. Moderator Charles Cox brings together experienced investors and operators to explore how this position is expanding beyond traditional oversight and shaping outcomes in portfolio companies. Let's turn it over to Charles for the full discussion.
Good afternoon, everybody. I appreciate you attending this panel. I'm very excited about it. Charles Cox, I'm a partner and head of business development at Longview Capital. We're a lower middle market private equity firm focused in New Orleans. We've got about $1 billion under management. We've been around for 25 years, and we focus exclusively on founder, family run businesses, entrepreneur run businesses, where we're the first institutional capital to drive growth and professionalization. And one of the I think most strategic tools in our toolkit is the implementation of operating partners to help everything from the initial investment thesis to sourcing to evaluating opportunities, then to executing opportunities, monitoring, and then all the way to exit. And so we focus on 8 industries and have operating partners in all of those. And I think it's very strategic and a differentiation for us, and a lot of the market understands that too, and they also implement that. And so today we're going to talk about the role of an operating partner, how it's evolved, how it assists private equity firms, how it drives value within portfolio companies, and the future. So we've got a great panel here. To my left is Brendan Burke, and I'll let him introduce himself and go down the line and share about your firm and background.
Thank you, Charles. Good morning, everybody. My name is Brendan Burke. I run the sponsor coverage business for an investment banking firm called Capstone Partners. We are 220 or so people spread out all across the United States, headquarters in Boston and Denver, and we're owned by Huntington Bank out of Columbus, Ohio. Paul?
Hey, I'm Paul Everett. I am the operating partner for specialty packaging vertical for Longview Capital. Work with Charles and our packaging team. My background is out of the blown film industry, so companies like Heritage Bag Company, Pitt Plastics, Clendalkin North America, which we transacted and sold to Novalex, which has just joined up with Pactiv. Been out of there about 6 years. Met Longview 6 years ago when we diligenced a company called Summit Plastics, which became Inatex, and loved the approach to the market and joined as the operating partner, and have been there since.
Hi, I'm Scott Gilbertson. I'm a principal with Finkston Partners. Been with the firm for 8 years. We started in 1989. We're on our 6th fund, a $425 million investment vehicle. We too, like Longview, are investors into founder, family, and entrepreneur-owned companies. 3 to 12 million of EBITDA is what we seek out. We're investing in companies with 20 to 120 million of enterprise value. We're control investors. Working with the founder family entrepreneurs to help transition them from being privately owned, founder run, to being institutionally run and institutionally owned, with the goal of helping them, double or triple in size during ownership period. We're an even mix of manufacturing, distribution, and business services. And those business services include both technician-led repair and maintenance companies, as well as white-collar related services like IT, MSP services, and ERP implementation work. So great to be here today.
Hi, my name is Paul Twaddell. I'm with Finkston Partners. I joined last May, so I've spent the last 20 years prior to that in Fortune 500 manufacturing companies, about 10 years with Eaton Corporation, about 10 years with Dover Corporation, in roles like product management, strategic planning, strategic marketing, led a global sales team that led into running the global P&L, and did that for about 7 years with Dover before coming to Finkston. So chose Finkston because we are really an operating focused PE firm. We really do leverage kind of the operating team in most everything that we do. It's been an interesting transition from me going from Fortune 500 manufacturing now to changing a little bit of a lens, right, in the private equity world. But I'm enjoying every minute of it, and I'm really happy to be here today.
Great. Thank you. So I think we can kind of start broadly. I know operating partner can be a very open-ended kind of definition and position. There's advisors, there's consultants, and I think every private equity firm has a different approach with their operating partner. At Longview Capital, as I mentioned on the front end, there's a lot of work on investment theses. There's sourcing. There's involvement with portfolio companies, really the whole kind of soup to nuts of the life of our investment, and we really lead with our operating partners. Paul, it might be helpful if you can maybe share with the audience where you spend your time, what excites you, and what your role is.
I'll try to do that. They throw to me first. Thanks. Okay. So actually, Charles runs sourcing and business development, and we spend a lot of time together on the sourcing new opportunities. So reviewing new opportunities, looking into the market, figuring out what's there. We do a lot of proprietary deal sourcing. So taking my background and experience and a lot of relationships that I have, and usually trying to touch base with business owners to connect on opportunities for people who are looking for a partner to grow their business. Once we get past that deal sourcing side, then we, obviously move into the diligence phase. We spend a lot of time digging in on diligence and hopefully bring some of my background and experience to that process to help through the diligence period. And then after we transact the business, it's really creating a plan with the leadership team there, making sure we have all the people in the right seats on the bus, building a strategy, figuring out what front-end investments are going to move the business most quickly. We tend to invest very, very heavily on the front end in what we call investing on that J curve, where we'll invest very heavily. A good example is one of our portfolio companies. We got them into new markets, new capabilities with like pouching and digital printing to really move into new markets. And in doing that, helping build that strategy with the team and then digging in on a daily basis to wherever they need help. That's where the bulk of my time spent. You wear a lot of different hats, and that's really exciting for me and a lot of fun because you get to dig in on a lot of different levels, from sales and marketing, which is a lot of my background, even into the operations and that side of the business. Also, I guess I'll touch on, like we had with our Traco, we had leadership changes. Had the opportunity to find and recruit a gentleman who was a friend to come in as CEO of that business, help with that transition. So again, it's wearing a lot of different hats and really jumping in wherever the business can potentially use an extra resource and help.
And Scott, maybe provide y'all's strategy and support.
Yeah, you bet. Paul said it, we're operationally focused. And what does that mean for us? Being investors in the founder family-owned companies that we take on, the companies have never had debt before, and we're going to aggressively grow the business. There's going to be some changes that are going to naturally happen, and our job is to create a turnkey investment platform to be able to sell 5 years down the line. And we're going to start the company building, right after investment to give it the infrastructure it needs to be able to grow, double or triple in size of value, make add-on acquisitions, and build out the team as well as the resources needed to support the team and ultimately the facilities. It's a lot. It's a big lift. And since the beginning of Finkston, we've always had that operating role there, and it works hand in hand. I'll let Paul, I'm not going to steal all his thunder on this, but that's his job, is we work together in diligence on the company. And he has to say yes to the deal or we're not going to do it. And that's an important step. But then he's also got to live with it. He's going to be the growth coach for the company going forward, to give them the resources they need to help it really thrive down the road. And that's why we do it. 40% of our professionals are operating partners that have come from industry, that are generalist in nature, but have had all sorts of responsibilities, including P&L, like payroll, sitting in a chair before to help make business decisions. And now their new role is going to be as a coach to help our investments out, get bigger and better. And it's not enough in today's world to buy, hold, sell. It doesn't work that way. You guys know that as well too. You have to make business improvements while you own the business for us to generate our returns. And that's what Paul's team, the 6 professionals that we have, they're charged with that function.
Thank you. And Paul, maybe, I don't know, most recent example of your involvement with the portfolio company. When did you get involved? What are your responsibilities, and where is that today would be helpful?
Yeah, sure. So just recently, we acquired a platform company mid-April. And I'm the operator that was involved in it from the very beginning, from the deal sourcing to the due diligence all the way through the process. So we closed on that deal on April 18th, and we're in the process of implementing our 100-day plan, the year 1 plan, which is pretty prescribed. I can show you the spreadsheet, but it's probably more complex than you guys would want to take a look at. But yeah, there's a series of things we'll go through, from CEO onboarding, right, to taking a look at reviewing the due diligence with them, putting the financial package together, net working capital adjustments, opening balance sheet. We'll get through SPO sessions, we call them strategic planning sessions. So we just held that, and we facilitate that. It's working through what are the things we want to go focus on, your strategic initiatives for next year, and what are the things that we want to go drive. And so what you find with some of these, companies as you buy them and they're founder owned, they're really led by strategy from the CEO and maybe another person or two. These organizations tend to be very reactive, right? So how do we put a deliberate, proactive strategy in place to where we want to go and what we want to be? And that's what we started to work on with these initiatives. So we got through that session, walked them through, what are the things we want to go focus on. For example, we want to go grow $1 million in this market. Pretty quickly after that, you come to realize the feedback from that session is, well, we don't necessarily know what to do with that now, right? We want to go grow $1 million in the market, what do we go do? So the follow-on session was sitting down with the team to go through, okay, what does the market look like? Who are we competing against? How are we going to win? What products do we have, and what do we got to go develop? What does the channel and go-to-market strategy need to be? Who are the customers we need to go target? Really kind of working through how do you go action now this strategic initiative that we now put in place. So to Scott's point, and Paul even said, right, how do we align on the strategy? How do we make sure we got the right team in place? And then a lot of things we do is some things like that. How do we build organizational capability, right? Some of the stuff we do at Finkston was we have best practice sharing forums that we get the functional leaders together, and HR and the CFOs and the CEOs and engineering and supply chain from all the portfolio companies to talk through best practices, and we'll talk through different topics that are top of mind, tariffs, for example, right, with supply chain. I'm leading the sales and marketing forum that we have coming up here in September, so we're putting that kind of agenda together now. The other thing we do is CI training. So we do continuous improvement training. We'll identify a CI champion from each of the portfolio companies that will help be the local kind of coordinator for continuous improvement. And then we'll put leaders through training every year. So we've got 2 sessions we hold a year. Our goal is to get as many people as we possibly can trained in CI by the time we go and turn the company. So, and it's really just kind of basic CI. We're not trying to train black belts, but we're trying to train folks in basic problem solving, from how do you put a problem statement together, right? How do you start to understand the process? How do you start to take a look at data, right, to identify root causes, right? Very basic problem solving, but we want to build that organizational capability, right, within our portfolio companies. And then lastly, we bring to the table too is we do have partners in China, APAC from a supply chain perspective, right, helping from sourcing. In India, we have a partner there for not just sourcing, but market entry strategies and engineering and IT and other things that we can bring to the table to help them out.
It's important. It's really important to note that this is all facilitating as a coach, because if we ever grab the wheel from the management team, you can't give it back. Like it doesn't work. It doesn't work that way. So it really is helping them gain the knowledge themselves and helping them own the process, which is important because we've got 14 portfolio companies and there's 19 of us, right? Those numbers don't work out for command and control style operations. So it really is like building up those capabilities inherent in each company's over time. And by the time we're done with those 5 years, you've got a freestanding business that somebody's going to pay us for. If you got the right marketplace, you got the right conditions in place, and you got a scalable, platform company, a bigger private equity group. We've got a $35 million fund. The $1 billion plus funds are going to show up and want to buy that business and take it from there. They're not business builders. They are, finance specialists and asset deployers that are excited about buying a freestanding, ready to go turnkey business. Which is ultimately, that's where we have that operations team to create those returns out of selling just in that instance, which is in turn where Brendan spends his time trying to help private equity firms, harvest those type of deals.
The only thing, and it's a great point with the coaching versus taking the wheel, and that is one of the things I think from going from Fortune 500 world and managing a P&L and had a team there to now in the private equity space, taking that step back, and if I wanted to, when I was in Fortune 500, I could reach any of the organization and I can make a change if I wasn't happy or if I didn't see it happening. Now, it really is coaching, right? You don't want to be reaching around the leadership team. You don't want to be reaching too far in that organization. You don't want to be driving that change. You want that to be coming from the team, from the CEO. And as soon as you start to Scott's point, as soon as you start to take hold of that, then they step back and they say, okay, you go do it, right? And now it becomes your problem. Or if you're not achieving the results, it's because you are doing this, right? And so there really is a balance of how do you make and how do you coach them, right? How do you approach each of the individual CEOs and their personalities, right, to be able to drive and let them take the ball and run with it.
You'll probably agree with this. I think sometimes I've said a handful of times I've said it's a little bit like being a spotter in gymnastics. So one of the CEOs will call and say, "Hey, have you ever tried this trick before?" And yeah, and I fell on my head. I don't think I'd do that. Or sometimes, it's maybe we should try that. So you become a sounding board in one of the big hats to wear. It's just a sounding board, somebody else to bounce stuff by. Have you ever run into this before? And probably have.
And Paul, Paul Ebert and Longview Strategy, when we say operating partner, it's very industry focused. And so it gives us an advantage when we can walk into a business and say, this executive knows this industry inside and out. Also, I'm not just picking up Paul at the airport. We've got a close relationship. We've worked together for 7 years. So there's a real bond and trust and shared culture and alignment, which is extremely important. And you talked a lot about coachability. There are many times when I think that's the one determining factor that it's not really quantitative. You just sort of know. And so is your strategy, are you focused on any particular industry? Is it agnostic? I'm sure that you support the firm's industry, but how are you industry focused?
Yeah, we tend to be generalists, as Scott said. That said, my background is in power, right, with Eaton. Spent 10 years there, largely also in the industrial control space. 10 years with Dover in flow control and really kind of in industrial pumping. So I would say I bring the specialty in those two markets, in those two areas, and there certainly are quite a few deals we've looked at in that space, and that also has driven a proactive industry thesis in those areas. That said, we do get involved in other markets. In our firm, we do get involved in other opportunities and other things that come across our desk.
He's got test and measurements. He's got industrial knife distribution and consumable egg parts. So like that's as generalistic as you can get and still do what we're doing. So, but if we found something that was closely aligned with him in either power or flow control, he'd be at that meeting. Okay. And help us sell to that level as well too.
And so Brendan, our secret weapon here has been quiet. Sorry.
That's hard. That's hard to do. That's hard to do, guys.
So there are different strategies within private equity, and with respect to engaging investment bankers, there's very strategically focused PE strategies. There's generalist. How have you seen in a positive way private equity utilize operating partners to maybe stand out and win in a process?
Sure thing. So the most succinct description that I heard for this operating partner model came from my friend Terry, who works down the street at Frontenac. they've organized their entire origination and business development effort around their operating partners that they have in-house. And she said there's sort of a hierarchy of importance and like where the operating partners can really add value. The first is, are they going to bring us a deal that we wouldn't have otherwise seen, right? That is extraordinarily powerful for a private equity firm. Two, is this operating partner going to help me get into a deal at a preferential price? Like, am I going to be able to enter a little cheaper because I've got a relationship through this operating partner? And then the third is, can an operating partner help me break a tie at the end of a process, right? Like if there's like, particularly if it's a, a marketed sell side process, like in the, and there's like good pricing discovery through that process, like at some point, a seller is going to have to make a decision, particularly in in the relationship with an operating partner for a family or a founder. That's going to be a really important differentiator. And I can share tons of examples of all three that we see in our deal making.
And what percentage of the kind of PE universe that you engage would you think utilize a strategy like an operating partner or an advisor on a consultant on the front end on the sourcing aspect?
At a certain scale, virtually all the PE funds that we address will have some form of operating partner model. I think in many cases that's driven by the LP community where, and I think of this like the same way like business development professionals 10 to 15 years ago, where every firm didn't necessarily have one of these, but now it's become sort of like part of the fabric of fundraising. It's like we've got all of our ducks in a row to raise our next fund, and one of those things is like the sort of operating partner program. It's become a best practice. So I think for funds that have sort of gotten over the couple $100 million mark, virtually all of them have some kind of strategy, although it's 31 flavors in the way people implement it.
And so to that end, on the successful side, we appreciate your color. Have you seen situations to where an operating partner relationship wasn't positive at any stage of the deal?
Yeah, for sure. I'll give you a couple, one really old one and one very, very new one. This was early in my career. I remember I was representing a manufacturing business, and a private equity firm that we knew pretty well had an operating partner that was clearly like on the bench, and his salary was like burning a hole in their pocket. And so they sent this operating partner into this meeting when he knew nothing about the industry. He was just like, an accomplished CEO and a really nice guy, but our client walked out of the meeting saying like, why was that guy in this meeting? Like, what did he add? Because he was just asking a bunch of questions, like trying to get up to speed. And we ended up kicking them out of the process just because it was like, they've sort of missed the mark. The other example, and this sort of speaks to the sort of tiebreaker, we sold a professional services business at the end of last year, and this was a hotly contested auction with a ton of participants, and the deal was sort of like priced to perfection. So we get to the end of the process. All of the finalists had very, very accomplished operating partners. And one of the teams, like the operating partner was sort of a Big Four consulting guy, and like he was like a little bit pompous, candidly. And they ended up not getting the deal, even though the structure of their bid was actually superior to the winners, because the two firms that won had an operating partner that the partnership group of my client absolutely adored. And they were like, if we get to work with this guy, this investment's going to work out. And then they ended up winning the deal because of it.
Absolutely. Yeah, I mean, we really lead with our operating partners and want them to be the most important person in the room. And a lot of times there's that gravity that does separate yourself and builds that trust and alignment with the management team. Speaking of the management team sort of dynamic for both Pauls, how much time do you spend with your private equity sponsors and the management team, and how does that ebb and flow, and what's kind of the right mix?
So a good bit. I'm on weekly calls with our management teams for each of the portfolio companies. Usually just listening and being there to be that sounding board A lot of those, have you done this? Have you seen this? What are other people doing? As conversations are taking place, offering, different pieces of advice, or, sometimes we'll know somebody in an equipment manufacturer. There might be a phone call that someone on the team needs to make and can make a contact there. So kind of drawing on that experience, but engaged really on a weekly basis on update calls and management team calls to try to help out wherever I can assist. Also sit on the boards of each of the portfolio companies, so involved at that level as well. Yes, what the right level of engagement was, I don't know what the right level is. At times you're probably too involved, and at other times not enough. So it's running the balance to not be annoying and certainly trying to be helpful.
Yeah, and I would say it probably varies a little bit, right? Part of it, I think you're absolutely right. We're engaged with the management teams basically on a weekly basis. We got a set of KPIs we try to get in place. We have a weekly review to go through the KPIs and how are you doing. When does that change? It depends on where they are in the investment cycle, right? Early on, we spend a ton of time with them. Like I just mentioned, we acquired a company in April. I'm spending a ton of time with them on all the onboarding and getting them into understanding how do you work with Finkston, and there's a lot of time spent there. The other time we just spend a lot more time with the companies if they're not hitting their objectives and they're not doing well, right? You tend to spend time where you've got issues or you got challenges. If I'm not having a challenge and I'm aligned with the CEO on the strategy and they're implementing it and they're hitting their numbers, there's probably less time spent there. However, if I don't feel like they are on track, they're not hitting their numbers, that they don't have a path to get there, then we spend more time with them.
And do you support, strategic conversations around add-ons and expansion?
Yeah, absolutely. That's part of the strategic planning process, and that's where we will work really closely with Scott and our investment team on, and the leadership team putting together that add-on strategy. What companies should we be looking at? We do have some third-party providers that can do a market landscape study for us. That typically comes back with 800 lists of 800 companies. However, when you sit down with the leadership team and say, well, that doesn't fit, this doesn't make sense, and you narrow it down to, a good list that we want to go target, and then we get engaged with our investment team, maybe a buy-side firm, on helping us to go after that.
And back to both Pauls, maybe give an example of how your involvement drove increase in revenue or EBITDA or exit value.
We haven't exited either one of the portfolios yet, so certainly hoping we're adding value as we go along here. But one in particular is, two examples. So our Traco business out in Utah, we sat down with the management team, and this was a business that did pressure-sensitive labels and shrink sleeves. Lots of printing and converting. We looked at the management team and said, hey, what is the customer base asking for that you don't have today? And resounding answer was bigger scale digital printing and pouching. All of our contract manufacturers and co-mans would love to have us do pouching. So we immediately put a large scale HP digital printer on the floor, followed that with a pouch machine and all the laminating that went with it. We've filled that piece of machinery up. We have another one that we put in behind that. It's now full. The third one goes in next month. So really listen to the management team. What do the customers want? Where can we go to better serve our customer base? And certainly that has built value. Similarly, our Initex business, so this is it started as a blown film manufacturing platform. We added downstream capabilities with two add-ons, so two printer converters. So these were large flexo printers that make all kinds of different bags and forms of bags, reclosables, things like that. When we got into that business, it was same customer base, down the same lanes, same sales forces. That worked out quite well, but we wanted to be able to vertically integrate. So we took the extrusion business, Summit, and we added a 5-layer W&H line. Again, listening to the management team, how can we vertically integrate and supply our two converting businesses? And that was it. We needed to expand our capability with better equipment so we could produce converter grade film. We'll fill that up, half of the way internally, but now it's expanded us to move into adjacent markets and down the value chain on that side. So certainly believe that we're adding value in that way as well.
Paul, anything to add?
Yeah, sure. I got a specific example. One of the companies I started working with towards the end of last year, kind of being the lead operator on that opportunity. Small company, does instrumentation, measurement, calibration equipment. And we recently had brought in a CEO that was the first, I think, kind of professional CEO we brought in post-founder. And he kind of walked into a bit of a mess. The P&L was kind of a mess. There really wasn't a ton of, I would say, alignment around what the strategy was. We're being very reactive. When you looked at the board book, we're going through our board reviews, and I'm not joking, there are probably 80 action items that were coming out of things we're working on. Like, here's all the stuff we're working on, but we really had no idea, like, why are we working on this, and does it align to what we really want to try to go do? So worked with him initially to say, all right, let's take a step back. What are the things that are the kind of reoccurring themes across all these actions you're trying to do? What's our strategic direction? And then we implemented what I call maybe in the past was strategic goal deployment. What are the things we want to go work on? What are the targets we want to set for those? Do we have a good set of action plans behind them with owners? And then what are the KPIs that we want to put in place to measure that? I'm sure you have sort of the bowler charts, and we're reviewing that kind of weekly now. So we put what I say strategic alignment initiative in place. We've got the team behind it. They're all aligned with what we're trying to do. We got good measurements in place, and now there's some direction to the organization. The other thing we took a look at was a P&L. There were really kind of a couple things that were I would say big issues in the P&L. We were selling through a rep network that wasn't providing the value that we were paying for it. We decided to change the go-to-market strategy to more of a direct model. We started to transition away from reps and start to invest in direct salespeople, and we're right in the middle of that now, getting the right mix of people to go kind of change this go-to-market strategy. Thirdly, we were giving away price. There was really no pricing strategy. So I personally went in and downloaded 2 years worth of transactional data down to the line item, and I've just put an Excel spreadsheet together and identified all the areas that were leaking price, and then sat down with the CEO and the leadership for sale and just said, look, here's several examples of where you're just there's no control on discounting, right? There's no reason to be running a special promotion in this area. Pricing from week to week on some customers changes depending on who's entering the order. So identified probably 6 or 7 areas that we got to stop doing and get more control over the pricing. And since Q4 last year now to Q2, we've raised gross profits by 5% in literally in 6 months, just by getting better controls on the pricing. So we're continuing to do the right things there. Like, it takes a while for these things to evolve, right? You can't solve them all overnight, but we are starting to see some benefit there.
That's a small business in a big industry, and we got the chance to grow. Like, we really do. And taking those steps allows us to be able to, chart the path. Where before we're muddling around, because it's hard to go from being that founder-owned business and paying him out and keeping his interest. It's really tough to keep someone's attention after you give them $30 million. It really is. And having somebody to help guide the business through to the next stage that's why we have that resource. And ultimately why our limited partners invest in us, is that we do have that resource to help it go from being founder to being institutionally owned.
And are those characteristics that of the business that you see during diligence or on the front end that you look at, you identify them and say, this is an opportunity, this is where I can come in and add value?
You try to. It's hard. In underwriting it you can identify it, but do you really underwrite it, and does it allow you to pay more for the business, which is ultimately the real test to win in one of Brendan's deals? That's really hard. And it becomes more gravy than it becomes, hard dollars that you're putting into the valuation. But at some point in time, if you want to invest, you got to buy down. And having that resource allows us to say, yes, we are going to sign, like, he's got to sign up for it because it's going to be his butt, right? And if he signs up for a gross profit improvement of 5%, it's got to come due, or we're going to be behind. And he's an investor. It's his money as well as ours. And if we fall short, we're all going to pay for it too.
Just kind of going backwards a little bit, but broadly, Scott, if you had to instruct or share best practices with a PE firm who's, newly developing or building out their operating partner model, what would that look like? What would be some words of advice?
That's a great question. It's got to be both what both Pauls do, and you got to be able to talk to the business owner. That's a really important role, is being able to have somebody that's comfortable talking to a business owner and being able to, make them feel comfortable that you understand the business going in. That is, or you're never going to bring the deals in, right? You said it, that most folks do have an operating resource, and most of them are bringing that resource to those management meetings. So you need somebody that will present, and somebody that's going to be able to talk without putting their foot in their mouth. That's step one. And you need somebody who's proficient, that is able to actually go do what they say we're going to do. It's challenging to find that person that can do both, and that has got a varied background like the Pauls do, to be able to help those companies out. So that it's all about the people involved who you're going to select. It's not easy. It's tough to date. It ends up being, it can end up being shotgun, many times, and that's a challenge to live with too. And just surviving a hiring process doesn't necessarily mean they're going to be good at it, long term. So that's the hardest part. But empowering them to go do the work and have it not be, you're going to go do this because you do it, and actually accepting it is an important part of how we make these investments work too. So there is free will by the operating partners. It's not foisted. He's a GP member. He's got the same economic stakes that I do, and so it's not us telling him what to do. It's us, collaboratively have a partnership. This is what we're going to do. We had dinner last night, and it was the same conversation, just with food in front of us. And it's about creating conviction, right? It's about creating internal conviction for us to spend time and money on the deal, and ultimately want to live with it for the next 5 years. It's also about outside the walls conviction. It's about getting those business owners to say yes to us, because there are a lot of us, right? And to separate the personalities and the experience of folks like the Pauls here make a huge impact on our ability to make these investments. And our best returns were generated off of just this scenario. Like, our highest cash on cash amount was created. Our colleague Ken was at IDEX and ran the fuels division for them. And we met a business it was a component distributor of safety shutoff valves that prevent blowouts at refineries. And it's an esoteric industry, and it was a really hard, difficult business owner who did this his own way. He was a repair guy that decided to create a distribution company because he couldn't get his products. And he grew this up to a size that he could no longer go grow it efficiently himself. Like, the working capital became a drag on him, and he needed to sell. And it was us versus the strategic. And the fact that Ken could talk the talk, you've got to say your analogy. Go ahead.
I made the joke earlier that if you're in the industry, you're kind of in the club, and so it'd be similar to if you pull into a gas station in a Corvette, all the other Corvette guys will talk to you, but if you don't, they might not, because you're not in the club. So it just gets you over that hurdle of being in the club, so to speak.
So Ken was able to talk the talk and talk about what happens at the refinery, and it made it relieved this business owner, and he's a challenging individual, and he saw a partner in Ken that could fight through the issues that were going to come up. And it was all family members at the company. Like, it was like 20 people, and 12 of them were related, right? Like, that's the stuff that we end up fighting through on a regular basis. And now the company is, it's 5 times as big, able to get to the other side, sold it to a lot. Now it's a big family office-owned business, and it's doing great. But that having Ken as part of our team made all the difference in us winning that deal, and then successfully helping the company get to where it needed to get ultimately as well too. So it makes all the difference in the world for how we invest, as well as for you guys too.
Yeah, and I think the conviction internally for at least the business development function, we see a large number of deals daily, and we process this internally, and they might have all the characteristics, a booming industry, high margins, high barriers to entry, lots of room for growth. The next question is, what does our industry operating partner think? And is there an angle? And if that is no, it hits a brick wall. And so internally, that's the first question that really our investment committee asks. Paul, maybe share what's the hardest part of being an operating partner?
Yeah, I think it does go back to what I mentioned earlier, right? You are working with the leadership teams, you're working with the CEOs. They've got their personality, they've got their thoughts on how it should be run. You have your thoughts on how it should be, and you got to work through the problem. You got to work through the personality, right? And I think being able to do that, right, to put a strategic direction in place, but then also coach, like we just mentioned, without reaching into that organization to go really imprint your fingerprint where it probably shouldn't be. And I think that's where coming in, especially like I said from Fortune 500, that's been my big learning curve, right? Don't overstep. Make sure that you're holding them responsible, you're coaching, and you got to get through that personality. What works in the conversation works with one CEO at the company I mentioned earlier. We're on the same wavelength. He's sometimes a step ahead of me. We bounce things off each other really well. The other one that I've been working with, like he'll get there with me, but I got to do a lot of coaching and eventually get him to understand where some of his challenges are and gaps. He'll get there with me, but it does take a little bit more effort.
And time is the enemy, right? Like we get 5 years to make this happen, and sometimes these changes are slow, and it keeps you from getting the growth that you want when you can't make those changes happen. It's a constant balance between those issues.
Yeah, I would agree with what you said wholeheartedly, and I had to learn some of this on the front end the hard way too. You're used to being in a business and driving efforts and calling some of the shots, and that changes to being that coach and liaison really between the private equity group and the business. Everybody wants the bucket with $30 million in it. And the backside of that is, but I don't want to change anything. We want to keep doing things just like we have. The reality is, for it to be a good investment, we all have to move the business forward. So it's helping coach through that and really picking up that pace, explaining that time constraint and things do have to move a little faster, bigger sense of urgency. So being that liaison to help the understanding on that sometimes.
Great. Well, we hit time. I really appreciate everyone attending. I know we're up against lunch, and I want to thank my panel as well. Thank you.
Thanks, Charles.
Hey.
A big thank you to Charles Cox and our panel for sharing such practical and forward-thinking perspectives on the evolving role of operating partners. We look forward to having you join us for our next episode from the summer conference.